Hi everybody, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Trading last week has been a sort of steady-as-she-goes, indecisive kind of week, albeit with a nice pop at the end. The FANGs have been either rising or hanging in nicely, but the question as to whether they have found solid footing remains very much in the air. We'll take a hard look and see if anything is becoming a little more clear, or not. I strongly suspect that the central issue for investors is that the FANGs have had such a miserable year in 2022 that they must be cheap now. Indeed, this is a key consideration for many of the NASDAQ stocks, which have been unmercifully slaughtered last year, some of them as much as 90%. Surely, many are thinking, hoping, some of them must be good value now. I have to say, from my vantage point, however, it's a nice thought, but for the most part, I still do not see that much value has crept in. Was it Warren Buffett who said, when they drain the lake, you get to see who's been swimming without a bathing suit? What all too often has happened is that analysts thought there was a bathing suit and it turned into a mirage, and they are forced to reduce, often to zero and below, the phantom earnings that had been promised. Well, this is the earnings season, and it's show and tell. First off the mark is my favorite stock, Netflix, which offered up a big surprise. Or did it? We'll look in a moment. I will remind you one last time that if you missed our introductory overview webinar, but would still like to watch the recording, I will again show you how to tune in later in the video. And if you are still thinking about joining and would still like to take advantage of our limited time offer, then you can go to www.strategicanalysis.ca/pricing. As far as our market index work is concerned, the NASDAQ 100 is far from showing signs that a bottom has been reached. The fair market value of the NASDAQ 100 suggests that an additional 20% of downside risks remain in that index before I can even say that with a modicum of clear conscience that the coast would be seen as even being somewhat clear. However, if things transpire, as history points to, and as I suspect, a powerful and possibly sustained rally does lie ahead, but that is not from today's valuation level. The simple secret to avoiding trouble last year was just to avoid poor values, not being out of the market. A good number of value stocks actually had a good year. So despite what you've seen in our FANG Friday webcasts in the past year, I repeat that I am not a perma-bear, but I am and remain a perma-value investor. The question now is, what's ahead for 2023? But before we take a close look at those FANGs and what is going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it. Okay, well, let's start off with, no surprise, Netflix. And Netflix certainly came in with, well, what seems to be interpreted by the market as a blockbuster quarter. You can see our close last night was $315, but the stock is well up from there, and has kind of broken out from that gap, Remember I showed you some time ago and I said, look at the market wants to close the gap. Well, the market has certainly closed the gap and broken out, and it looks to me as if Netflix is heading on to its bubble price. One issue, however, I have to say, and that is to say that earnings and sales guidance for the next quarter are not that exciting. So I am not overwhelmingly bullish, despite those nice numbers that they had in the last quarter of 2022. Meta has bottomed after its peak at its bubble price. That's 7.4 times book value. Bottomed just a little bit below in a sort of an overshoot there at its growth price, which is 2 times book value. Well, that's about a 73% decline. Has had a decent rally. Is one of or was one of 2 stocks that actually possessed fair market value potential here, which is the dotted line. Okay, the stock price was under there. Rose to its mid-growth price, that's 2.5 times book value, and has broken out. And we'll have to see whether we've got some nice supporting earnings to hold that stock at its mid-growth and higher. Tesla, after a spectacular decline, also of roughly 70%, has bottomed, or at least bottomed for the moment at any rate, at its bubble price. And the bubble price, I've told you before, is a very, very strong breakpoint from a mathematical point of view. It's now had a one breakpoint rally, and the question is, what now? If you see, looking back, and Tesla for the past few months, it sort of traded in a range, HB4 to HB5, weekly HB3 to 4, a little bit better 2 to 3, not at all in HB1 to 2, but has found some footing at its bubble price. Now it hit the HB1, which is 9.5 times book value, with precision, and has set back a little bit. We'll be watching this one carefully, and of course we'll be particularly interested in what the earnings are to support this company. NVIDIA, NVIDIA, of course, fell all the way from its HB6, which is 33 times book value. That was the peak, by the way, in the stock in 2000 as well. So as we frequently say, the market has a memory, and sometimes a very long memory. Well, it bottomed momentarily anyway at HB2. Has had a nice rally up. Actually tried to break down again, but you know, those gains in Bitcoin, which have risen from 16,000 to over 21,000 now, appear to have put some confidence back in the possible demand for NVIDIA chips, which actually power almost all of those Bitcoin miners. Apple, well, you know, you've got to do a little bit of what we call inferential regression to find out where Apple might have bottomed. And I did a little bit. If I take this this trend of the HB6 before the turn, right when the company reported, if I take that and I extend it, it looks to me very much as if the HB6, now the trend is fallen to about right where that HB4 number is, about $121, $122. The company has rallied from there, maybe off its putative HB6, which we'll have to see in a moment. I'll be quite interested to see myself. The company is due to report before the end of January, and as I say, I am really interested to see if the company continues to buy back stock at the rate that it has. Amazon had a perfect bounce, right at its mid super growth price. That's 5.5 times book value after breaking below its bubble price, or 7.4, and has been rallying ever since. Given what I see are the apparent fundamentals in this company, I'm not sure that it's going to be able to get above its bubble price if it gets that far. But again, we're going to find out those numbers very shortly. Alphabet, I'm showing you the very, very long-term trend of Alphabet, because you can see here that the stock actually came down off its bubble price, which had been a long time high for the company. You have to go actually all the way back for at the beginning of the time when it went public to see when it was up this high. But anyway, it hit there with precision. We put a sell on the stock. It was my expectation that we would get a pullback to its super growth price, its SG price, again 3.5 times book value, which for many years had been kind of a fulcrum value for the stock. You can see that the fair market value, which is, say, the earnings, are rolling over now, and so what we see in the first quarter is going to be interesting to see whether that trend continues, because if so, it will be pulling the shares down to my target, its super growth price target. Finally, Microsoft. Oh, poor Microsoft. It's just sort of been plodding very recently, when we've seen some nice rallies in some of the other FANG stocks. Poor Microsoft is just sort of puttering along. My expectation that the stock would head down to its bubble price remains very much intact. And again, I'll be interested to see what their first quarter is all about, because cloud computing, as far as I am able to make out, has not exactly been eclipsed, but very much a case of slowdown. And again, the fair market value is going nowhere. So, in summary, we are now in the early stages of the earnings reporting season, and it will be important to see whether or not some of those weak fair market value trends, that's the dotted line in the charts, continue, accelerate down, or level out. We will probably need another 2 weeks before the majority of the FANGs are in. NVIDIA, of course, will be a latecomer. And I would therefore expect that the market will hold its breath, at least for the moment. So, what should you be watching for this year? Netflix, my favorite FANG after it hit bottom, plunged almost 80% following my sell when it broke its HB3 price 16 times book, and then bottomed roughly at its super growth price, or 3.5 times book. Had a nice rebound and closed that trading gap following the collapse through its bubble price. I have wondered whether those shares wanted to go back to its bubble price, as frequently happens in this situation, or whether closing that gap was enough. I have to say that it looks today as if Netflix wants to finish its move to its bubble price. When you look at those fourth quarter numbers closely, however, it's not at all clear that they're all that bullish. So I don't expect any more than the bubble price at this time. Meta has enjoyed a 1-point breakpoint rebound and now has managed to break out above its mid-growth price, or 2.5 times book, which is certainly promising. Hold on for now, but keep in mind that that mid-growth price must hold. Tesla found support at its bubble price for the time being. The challenge of looking at its current fair market value measure as evidence that a bottom is at hand is that the company has been trying to boost demand by price cutting. That bespeaks a lot of sales pressure, and not surprising given the vast number of electrical vehicles on or coming to market, many with better quality records than Tesla enjoys. I can certainly understand why Musk has already sold some 40 billion of his stock. What we must now watch for, however, is to see that the bubble price, that's at $106, can hold. As far as NVIDIA is concerned, it almost appears as if it's tracking Bitcoin, which has had one heck of a rally up from roughly 16,000 to as high as $21,420 today. Perhaps the hunt for those Bitcoins is back on, and the NVIDIA chips will be hot again. Turning to Apple, I await their fourth quarter, which should be in before the end of the month. I want to see if the company has continued to buy back shares, as seems to be the case. It remains everybody's favorite stock, and their share buyback program has kept the stock valuation higher than it actually merits. Apple has only lost about 22% versus the 31% for the NASDAQ 100. So I was right not to just bail out as I did with the other FANGs. Although it has only offered relative, not absolute value. As far as I can see, if you followed my advice and extended the downtrend line of the HB6, that's 33 times book, to guesstimate where the breakdown might occur, the target would be just about 121, just below the current share price low. So you would still be invested here. Otherwise, my advice was to do as I intend to do, forget about it. Amazon found its support at its mid-super growth price, that's 5.5 times book, as it did at its bubble price earlier and higher, and has been rallying since. The bubble price would be all that I could envisage right now, and I await the first quarter earnings with considerable interest. Virtually all aspects of the company look to be weak, and the company appears to agree, due to their massive layoffs and canceled expansion plans. Even cloud computing is in the doghouse these days. I would exercise considerable caution as the bubble price approaches. Now, Alphabet has recently rallied back to its low super growth price, that's 4.5 times book, and I would watch for a possible breakout here, which could give us a short-term buy signal. But I still expect a more tradable and sustainable low at its super growth price. That's 3.5 times book, which, as I showed you, for many years was its fulcrum value, essentially its measure of central tendency. Fourth quarter business and earnings results could tell an interesting story. Finally, Microsoft has been acting rather poorly in this current rally, and I have no reason to change my expectation that we would enjoy a tradable rebound, but not until the shares reach their bubble price, which is 7.4 times book. Let me conclude by pointing out that the NASDAQ 100 has not found a sustainable low. And I need to emphasize that I have never seen a solid market bottom that has not come until one of our key SVA breakpoints has been reached. I can still promise you that a good trading opportunity lies ahead, but it is not right now. Right now, I would personally remain cautious and watch those individual FANG stock breakpoints for evidence of support or failure. Finally, if you want to learn more about SVA and missed our introductory webinar, you can click that link at the end of the video right here. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.